Larry, turning back for a minute to Jay Powell's remarks this week, he had sort of an initial explanation of what happened with inflation, where it came from, what the Fed did in response. And at least my take on it was, we had really supply shocks that were really unprecedented. It took longer to sort them out. And we had this big demand push, particularly in goods that spilled over into services. So it was sort of understandable why we sort of made a mistake on team transitory. What's your reaction?
I guess it's understandable. I think I was reasonably clear in the spring of 2021 that it seemed to me that there were enormous inflation risks. I think looking back, it's kind of incredible that the Fed could have said in May of 2021 that it expected to hold interest rates at zero until the summer of 2024. And so the misjudgment was a pretty egregious one. They're trying to leave the impression that it was all surprising supply shocks. And I think there are two problems with that view. One is there shouldn't have been anything very surprising about it. It's not like everybody didn't know that COVID was affecting the supply capacity of the economy. So when the supply capacity is down, that means you have to adjust the demand. And the other is that if you look at nominal GDP growth, so that's dollar GDP, it's the money stock adjusted for the velocity, it averaged 10% in 2021 and 2022, and above 8% for the 3 years, 2021 to 2023. So how can you think with 8 to 10% nominal GDP growth that you're going to have anything like target inflation? And that nominal GDP is just a measure of demand, which is what monetary policy is supposed to be all about. So I think it was a low point in terms of monetary policy judgment. But, you know, we all make lots of mistakes. And the important thing is when you make a mistake to recognize it and fix it. And I've got to give the Fed credit for the fact that while it wasn't always obvious that this would be the case, they moved strongly enough and vigorously enough to keep expectations anchored. And it now looks more, frankly, than I would have expected, like we're going to get out of this very costly inflation episode without a major recession. That's not yet certain, but that's the way, that certainly looks more likely than it did a year or two ago. And so while I can't say good things about the Fed's judgment in the summer of 2021 and things they recognized only later, I think should have been clear sooner, I've got to give them a lot of credit for the overall picture where they adjusted quickly, if a bit belatedly. And as a consequence, I think if you look at the growth statistics or the employment statistics through this period, they will be remembered as having been quite good.